Thank you. And why don't panelists, why don't you guys come on up here? We'll go through some introductions. Hey, while they're walking up, I just wanted to say welcome. This is the Are Your Customers Ready for Instant Payments panel. We're going to be talking through that exact topic, working through kind of some questions around instant payments, kind of pushing some of the newer topics that are out there. So my name is Dean Nolan. I am the Director of Instant Payments and Commercial Cards at Fifth Third Bank. And joining me on the stage are three experts from the industry in different areas of instant payments. And I'm going to go ahead and let them introduce themselves, and then we'll get into some of the panel questions. So Peter, how about we start with you?
Yes, so Peter Davey. I lead up product innovation and labs for a small little company that's 165 years old called The Clearinghouse. We clear and settle $2 trillion a day for the US economy, and we operate payment systems for all financial institutions. And just so I can make the panel really short, the answer is yes, your customers want real-time payments, but you know you're not ready, so.
Hi, my name is Sullivan. I work for a company called FIS, which is, I think, the biggest fintech probably in the world. I forget where we're up to now, 80,000 people. We have all kinds of payment products. I am responsible for a couple of the payment systems in the Americas that we sell. Wire transfer, real-time payments, ACH, pretty much all of the different payment rails, non-card in the Americas.
I'm Josh Karoly. I'm a director of payments product at a small startup called Netflix. We are, at this point, we have about 220 million plus customers around the world that we service on a monthly basis, because it's a monthly subscription business model throughout the world that we utilize. I've been there for about 8.5 years.
Well, thank you, and appreciate you all making it. I know, Josh, you were kind of just able to make it here, got stuck on the travel, so I appreciate you going through the effort to get here for our panel. Just for the audience and just to level set a little bit, when we're talking about instant payments, we're going to be talking about irrevocable, real-time, 24/7 payments that are processed right now across the RTP network that the Clearinghouse provides, that will be processed via FedNow, and then maybe processed via some other channels as this market continues to grow. And really, as Peter hit on, the purpose of the panel is really saying, hey, customers are ready for this. All of us are hearing it from, as a bank side, we're hearing it from our corporate customers. Laura's hearing it from her bank customers. Peter's hearing it from his network customers. And Josh is one of those customers who's ready for it. So what we want to jump into a little bit today are kind of some topics of what customers are seeing, what benefits they're getting out of it, and then what we need to do in order to allow our customers to realize those benefits. So with that said, I'll start with the first question for the panel. And this was, what use cases are you seeing customers get the most benefit from today from instant payments? And Laura, I'll go ahead and start with you, and we'll just kind of go through the panelists then.
Well, it's been interesting to watch it grow since, I guess, 2017 when TCH implemented real-time payments. Certainly, I think, Peter, you can disagree, but COVID was a huge impetus. What we saw were people who, you didn't have coins, so you couldn't pay in cash. There were a lot of use cases that sent people towards electronic, and particularly the gig economy is what we've seen as the big driver, as the Ubers and Lyfts and various services like that. The people working for those services like to get paid immediately. They like to take somebody, drive somebody somewhere and then immediately get paid, and that has been a huge boost to it. So we are seeing a lot of business to consumer type payments initially. Another interesting use case one of my banking clients had was a gaming company. And it was really fascinating because they had done just a ton of research and noted that their customers were more trusting of them and actually put more money into the system when they knew they could get it back out immediately, which is counterintuitive because you would think that the company would be worried about the fact that they could withdraw their money immediately. But they actually had done all these studies where they were absolutely seeing the customers spend more on their site when they had this ability to retrieve their money immediately. There was also a trust factor in terms of they knew this company was on the up and up if they could get their money back immediately. So there have been some pretty fascinating use cases.
Yes, I would actually agree that that COVID was actually a pretty big boon for real-time payments. However, the interesting thing is we've been moving toward real-time payments for the last decade as an industry. We've taught our customers that payments can move in real time, even though really at the back end we've been fake and baking the entire thing. So we've been training our customers. Fintechs have been training our customers. I mean, PayPal's been doing real-time payments for a very, very long time. Venmo, et cetera, right? And even with our own bank-owned systems like Zelle, we said, okay, we can move this in real time, but we left the bank holding the bag in terms of where the settlement actually sat. So if you look at the last 10 years, we've been preparing our customers to live in a real-time world. And I think what COVID showed, and at the end of the day, we're all lazy, right? We don't make changes unless we absolutely have to or unless it's easy for us. That's the same for our customers. And I think the challenge that we've all had is like, well, if it ain't broke, don't fix it. It's been broke for a really long time. We just haven't wanted to fix it because we haven't had the impetus. And I think COVID ultimately drove us to say, well, now we don't have an excuse. We have to fix some of these legacy old processes. The fact that we still write checks is just asinine to me, right? So I look at the fact that I'm going to give somebody a piece of paper with my account number and my routing number on it and expect that that's going to be a good way to do business. But we haven't given our customers a replacement for the check that's easy enough to do it. And in fact, one story I'll tell real quick, just in terms of how difficult we make it as financial institutions to have our customers use our services. Over the winter, my dad was down at my house, and he always likes to give me a check for Christmas. I mean, it's cute that Dad likes to give me a check. He's a 70-year-old man. I'm like, great, thanks, Dad. He's like, I forgot my checkbook. It's at home. I said, great, well, let me show you this new thing called Zelle. So he uses USAA. So I'm actually going to name them because I feel like it's important to the story. He uses USAA. We go onto his app. I try to set it up. I put in my information so he can send me a Zelle transaction. I'm like, Dad, this will be really easy. You'll see it. I'll see it. Guess what? He had to go do extra validation with USA. He had to call in. You know how long it took him to call in to enable Zelle? 6 months later was my birthday, and he said, I still haven't done this. I said, Dad, can you just call them and figure out what's going on? But that's how difficult we make it for our own customers to be able to leverage these capabilities, something that should have been stupid simple. So we have to be able to make that a lot easier for folks.
Yeah, I agree. I think there's nothing, unfortunately, there's nothing fast about faster payments just yet. It's taking a little while to get there. But I have seen use cases bubble up and talking to just other peers in the merchant group where payroll services, I see a lot of things happening there. Treasury teams looking at more services now that the clearinghouse is raising it to $1 million, like being able to actually do some real payments on the enterprise side that we're able to send out. I see that as being a strong case. I'll save some of my comments for later in the vein of usability and what needs to be thought of there, because I agree 100% with what you brought up.
Yeah, and you brought up a good one on payroll too, and how customers are seeing it out there, and why we're saying customers are ready. We're starting to see customers come inquire to us about it, and a lot of it, especially in the payroll case, are a CEO or some executive at a company driving down the street past Wendy's, and it says, work today, get paid today, and he goes back to his office and says, how do we do that for our employees? And that then triggers the conversation. So it definitely shows the needs out there, but it's interesting that it's coming from a sign at a Wendy's that's driving this forward. So it's really important, as we talk about today, these sessions and getting out in front of our customers, it's important to tell them that we've got the capabilities there. And I think in some cases, yeah, we definitely can make it easier. So I know we talked a little bit about what we're seeing today. Let's talk a little bit about what we see coming on the near-term horizon, some additional use cases you might see out there. We've covered payroll. We've covered a little bit about some of the gaming and wallet type load. But Peter, any others you see like near-term horizon people should be looking at?
Yeah, so when we launched the real-time payment network in 2017, we launched it with a full stack of functionality. So, basically everything was available day one for people to use. Although what was only leveraged during, the first couple of years was really the receive of credit push. In fact, there's still only a very few financial institutions sending, because that's the hard part of the effort, is actually upgrading all your front-end products to be able to do that. But that's also where the opportunity lies for most people as well. It's great to receive, but if you can't also spend in real time, it's kind of pointless, right? So we need to be able to get there. So I think send is something that's on the radar of a lot more financial institutions now, that they see that they've got this money sitting there. They want to be able to now send that money out. And folks like FIS and others are actually developing their applications and stacks so that all of the front-end services can be upgraded. The challenge, though, ends up being the fact that RTP is a best, and even FedNow, their best capabilities that are embedded into the back office functions of companies like Netflix. They shouldn't have to work really hard to be able to access these products. So I think the movement forward of API-based capabilities to allow for transactions to flow in both directions is going to be hugely important over the next 5 or 6 years. But what we've been really focused in on is something called request for payment. And request for payment to me is actually the most interesting and probably exciting opportunity within the RTP space. The ability to now present an invoice or a bill in the environment in the same place that you're going to get paid in real time. And the ability to link all of that stuff together, and think about now embedding that into your back office functions to do automatic payables, automatic receivables, and be able to streamline all those functions. That is the holy grail. That actually helps to remove a lot of barriers across the industry. But we as a ecosystem have to actually enable our customers to be able to do work that way, to be able to see those economic gains in the long run, and start to continue to remove barriers to entry in terms of being able to do things like automate the response to a request for payment when a customer gives their authorization, tokenize those transactions. So I really see a lot of these technologies coming together to create new use cases on the network that are largely focused around business process automation and making customers' lives a lot easier.
So Josh, as Peter was talking about recurring payments, I know you had an opportunity to do some work with the Faster Payments Council on this. Perhaps you want to jump in with a little bit of that and add to it.
Yeah, so ever since I remember the Fed trying to kick off the initial task force of trying to do faster payments, I always thought, it'd be fantastic. I've got a great use case here at Netflix that we can do faster payments. I just through our own studies, I've seen roughly about 10% of our customers organically would want to pay directly from their bank account. I don't know why, but they do. But we don't really, there's not really a solution to do that online other than debit cards, which works well, how it works, but they don't want to necessarily use a debit card. They want to use something else. And they want to actually go directly to their bank account. So in that spirit, when the Faster Payments Council started up and they were looking to start a task force, I was like, hey, I'd love to start one that's thinking about how do we apply this to recurring payments. And so we started up a task force within the Faster Payments Council around recurring payments. And we just released our first white paper deliverable from that work group, which go check it out on the Faster Payments Council website. I can't remember if it's open to the public or behind the wall. It is open to the public, right? Yep. Yeah, good, thanks. I should know that, but it's open to the public. Everyone can access it. We listed out the key characteristics that we thought were needed in order to get recurring payments to work. If they're not perfect and you see holes in it, please reach out and let me know. Or Dean's also on the task force. You can let us know. But come tell us, right, about that. We want to hear about that. But some of the areas that we kind of called out were, if it's based in this good funds model, right, for example, there's the value that comes from irrevocability as an example that comes out of it. In addition to that, there is also the value of not overdrafting customers' accounts when they don't want the funds to come out, right? And so it's thinking that this is a characteristic. We want to make sure the consumer is having a great experience, but also make sure that what gets developed is strong enough and robust enough to be able to cater to many different use cases, whether my use case for e-commerce recurring, or utilities, or or investments on an ongoing basis, insurance, like whatever the use case might be, as long as it's a recurring payment, why can't faster payments be a part of that and to work well with that so that it can be a viable option to consumers who want to use it?
And Laura, I know, with what the role FIS plays, being able to enable banks to do some of this, maybe some comments on what you guys are doing with the software and where y'all are going.
Yeah, we've got obviously a lot of different irons in the fire in terms of things we're looking at. One of the comments I wanted to make on request for payment is, where we've seen that, we feel like that's going to be really effective for consumers who just don't want that debit to happen without their saying, yes, I'm ready for it. So we're seeing that. But, from an FIS perspective, we're looking at several things. APIs are huge. We've got to get away from passing, files, if you look at the ACH world, and into APIs. They are so much easier to implement. And so we really see that, as the basis for a lot of the things we're doing. The other big, I'll say, trend, buzzword, if you will, in the industry is embedded finance. And so the whole goal of that is to have, I'll say, almost widgets, where a company can literally embed that widget in whatever their process is and not have to have this huge, elaborate, mammoth system to generate payments, but literally whoever's using their application just hits a button and pay, kind of the same way you do if you're buying things online, but taking it deeper into less traditional things than actually buying. Another thing, we have a venture capital arm, and one of the things that they've been looking at is real-time payments at point of sale. So meaning when you go to pay for an item in a store, rather than it hitting your credit card, and the exchange fees, which I don't know if you guys are that familiar with it, but credit cards are not cheap for merchants to process. So to actually initiate a real-time payment to that merchant so that they can see right then and there, yep, I've got my payment, the customer can walk out the door. So that's another, again, an embedded finance service that we're looking at developing.
Yeah, I agree with you on the embedded piece. As you know, the gaming company you talked about is one that we service together in that space. And from their scenario, if a customer wants to unload their wallet, that API is embedded in that wallet software, so the customer doesn't really even have to do anything other than say, I want to unload it, and it will route down the real-time payment network if that's available, letting their customer get their money today, actually in 5 minutes versus in 2 days. But another customer that we're using, I think is a great example of that, was they process trust accounts for people, and they're trying to disperse those trust accounts. That's a lot of their business. So in this case, they've embedded the API into their ERP platform that the representatives are using on the phone. And when you call in and you want to get the money out of your trust account, they'll validate you on phone, do everything, and then they can actually move the money to the customer's account while the customer's still on the phone, right? And just the power of that, whether it's in that use case, or I've heard another use case being insurance companies. That was a big one where you can take a picture of your claim, and the rep on the other end of the phone can validate your claim and send you money. So while you're still at the accident scene, you've gotten the money to pay for your next car, right? So there's some really interesting use cases that are developing there. And I think we've hit a lot of them. So next question here is, we've got these great use cases. What are some of those barriers? How do we make all of this reality? How do we make this happen? And I'm just going to throw that to anybody to jump in on that one first.
Peter, what are you going to do about it? I'll give you my opinions too.
So yeah, I think, and I'd be interested. I know most of Josh's opinions on this, but no, I think it comes down to the fact that we've established a platform, a network that is easily integrated among almost any financial institution that wants to integrate against it. We've worked with the FISs of the world, we've worked with the FISERVs, we worked with the Jack Henrys, and we've said, hey, let's make this easy for people to connect and receive payments. The challenge is getting people in the boardroom of all of these financial institutions. So while we have the technical connection now to over 3,000 financial institutions across the entire United States, We only got 252 on the platform, right? So while that does represent over 60% of the deposit base in the US, and in some cases a much larger market share, we still have a lot of work to get banks connected into it. And one thing I'll say that everybody likes to pin FedNow against RTP. I would say stop talking about FedNow and RTP. Just talk about instant payment strategy in general, because regardless, you're going to have to go down one direction or both directions. And the good news is the FISs of the world have made it easy because they've actually built all the switching capabilities in the back office. But I think the big piece in terms of actually enabling these things is actually banks have to start offering services. But here's the thing. Banks are going about this the same way they've gone about product development for the past 35 years, which we already know doesn't work. And what they're trying to do is they're trying to develop an RTP product, the same way they developed an ACH product, the same way they developed a wire product. That doesn't work. In fact, gave a presentation at Notcha 15 years ago. One slide, it said a payment is a payment is a payment. We have to move down to making it more simple for our customers to actually start accepting and sending payments, which means that we have to go down to the basis and unbundle the crap that we've already built on top of this stuff. That is the hard piece. Now, there's banks that are doing a really good job at that, but there's a lot of banks that suck at it. And I think that's the piece that needs to be fixed to be able to create common and equal access to everybody. And if you've heard me speak before, you've heard that I hate the term ubiquity. So stop using the term ubiquity, because what ubiquity means is not that every bank is connected to a network. It means that every customer of every financial institution has access to those products and services. That is true ubiquity, and that is a really hard thing to achieve.
So I love all the work that the clearinghouse is doing in that space. I think the fact that you didn't pay me to say this, and I don't use any of your services, but at least not directly. The fact that the clearinghouse has done that I think is helped kind of. There's this whole like chicken and the egg thing, like what's going to happen first? And I think the reality is, in order for it to happen, we kind of all have to be a little bit of both, right? We have to be a little bit of the chicken and the egg to really make this thing go forth. We have to take a step into forward on the ledge like Indiana Jones, and just a little bit of faith, and you can move forward with it. When I think about some of the challenges too, I love going to the hardware store and buying a bunch of random crap. And sometimes I score, and I find something that works really well. And I got these really great connectors for my hose that I can just disconnect and reattach attachments to, and I love it. I think it's great. But then when someone in my family wanted to fill up the kiddie pool, they started coming to tears because they couldn't figure out how to use a stupid hose. Like they just didn't know what to do. Like, what happened to the hose? And I think it's the same thing when it comes to faster payments, is we need to make sure when we're thinking about it that the use case that you mentioned about your dad's like, I just want to give you some money. Like, that's all I want to do. Like, it just needs to work at the end of the day. And I think the way that happens is all of us coming together, talking together, working this throughout together. It's very much so an everybody is all in kind of scenario. I feel like what you kind of called out there, Peter, like oftentimes we think of, okay, this is another version of way of paying that's out there. It's like, no, this should be the way of paying. Like faster payments should be there's no reason my DoorDash should come faster than money, right? That shouldn't have to be the case at the end of the day. And so like that I think is something we need to really think through and work through and realize that faster payments is what payments should be, right? It should be instant. And I can go on, but I'll stop.
And I think Peter made a good point in that banks particularly the large ones, tend to approach this the same way as every other payment rail that we have in the US, and they really need to think of this differently. We're certainly from the FIS perspective trying to provide the tools, the widgets, to enable the bank. And I think it's been a mindset change at FIS because the banks are our customers for the most part. But we need to really start focusing down a level at that end user, and how can we help the banks service those customers? We shouldn't sit back and wait for the banks to come to us and say, oh, I want you to do X. We need to be very engaged and partners in figuring out how do we serve their end customers rather than just how do we serve the bank. Sure, we can build another payment rail. I mean, we run 50 all over the world. That's not the hard part. The hard part is how do you get it in the customer's hands so they can use it more effectively.
I think both Josh and Laura said it very well. You both said it somewhat differently, though. Josh said this should be the only way you use to pay. And I completely agree with that. And I'm not just saying that from an RTP perspective, but instant payments in general should be the only way. But you can't get there by doing batch files.
Yeah.
It completely doesn't work, right?
Yeah.
And that's where we've all started with, is taking batch files and unbundling them and trying to make them do it. And I think the term embedded finance scares a lot of people. It shouldn't. In fact, it should be immensely freeing to you, because what it means is that you can stop developing stupid products that your customers only partially use and partially appreciate, because now they're actually building the things on top of your platform, right? So, I think we just need to get smarter and think about it. I mean, I was asked on an airplane one time what I did for a living. That was probably the worst conversation that guy ever had. But he did ask me afterwards. He said, so what's next after real time? I said, there isn't anything next. I mean, at that point, we have finished the game. If you can move all payments in real time with surety, with all the information flows that need to happen on it, and it's embedded in the back office of anything, do you really need anything more than that? No, you're just building things on top of it at that point. So I think the goal is already out there in terms of where we all need to go, where customers want to go. Again, your customers already want it. They're just not going to ask for real-time payments or FedNow. They're going to ask for immediacy, finality, transparency, all the attributes of that. And you have to listen to those words and say, the only way I can get there is actually by moving to immediate payments.
A great answer on that. I have to say, being the banker on the panel, I'm like, I probably should defend a little bit here. But no, I will say I do agree. I 100% agree on the embedded finance piece, 100% agree on the API piece. And I think in an ideal world, instant payments is where it's going to be. Also know that in terms of looking at our customer base and servicing them, I mean, we do cash vault services still. We do check, we do ACH, we do wires, we do all this stuff. So in a lot of ways, we're doing things that our customers are wanting based on their business models. And really, when I was thinking about the answer to this question of how do we make this reality, it's a combination of all of us on stage making the technology available, but then it's also an education within the corporate customer base.
Yeah.
Because what we've seen is when we implement instant payments with a customer, the technology piece is only a part of it, and in a lot of cases, less than half of it. The bigger part is them adjusting their organization to a 24/7 irrevocable payments model. It's a very different model when you start to think about it. And what it does is, earlier today there were some sessions on identity management, right? That becomes super important, and authentication becomes super important, because in an irrevocable environment, that means you can't get it back. So think of payroll processing, if any of you work in payroll processing environments today. Those payroll companies occasionally have duplicative batches, and they'll pull it back because it's ACH. They've got 2 days to pull it back. Well, if you're doing a duplicate batch in an instant payment irrevocable environment, it's gone. And irrevocable, what that means is it's kind of like you have to ask for the money back. You don't have a right to take it back all the time. So it's, like I said, that concept, I just put that out there, you're just talking about ready. It's like, yeah, customers are ready to start making the payments and on the happy paths, and a lot of customers have thought through this, but then there's also education we all need to do as an industry to let them know about these other pieces necessary so they can get comfortable leaving their cash or their check or their ACH in some habits they had there and move over. So I just throw that out there. Fine taking shots at the banks, but it's not all us.
Well, that's why there's nothing fast about faster payments, right? It does take a village to raise a child. It takes a village to make faster payments happen. It does. I 100% agree with that.
Got it. So, as we started talking about this, there's organizations, Peter, you said 258 banks out there. We know not all corporate customers are there. If we had if folks in the audience were interested in their organization moving into instant payments, what are some of the things they need to consider? And I've hit a couple of them in my comments before, but other things you think they may need to consider or think about?
Yeah, I mean, I think, the point that you made around education, I think, is key. I mean, for the last 6 years, that the network's been in existence, I mean, the primary thing that we've been doing out there, because ultimately the network now runs itself, right? It's out there, it's working, we've made incremental improvements to it. But it's ultimately just continuing to educate people about how to leverage it. And, I think to the point that you made around the fact that people are out there still selling cash vault services. I think one of the challenges we have with our bankers is that we incentivize them to do certain things based on the products that we have. We don't incentivize them to actually problem solve for customers. In fact, I think the biggest role at a financial institution over the next 5 years needs to be integration teams that go out there and actually work with their customers to figure out how they can integrate those products, how they can integrate the customer services into the financial institution APIs, right? So the whole banking as a service thing, the whole API side of things, I think those are the things that need to continue to be educated with. And to me, it's a mindset shift of a financial institution to say, all right, let me go back to basics. What are my roles for my customers? It's to safeguard money, it's to help my customer move their money and use their money, and it's to be able to lend money, right? So if you take those tenets and you go, well, now how can I help my customer do that in a completely digital environment? That's the problem that needs to be solved at every single board of every single financial institution that exists in the US. And if they're not asking or addressing that problem, I think they're gonna end up becoming quickly irrelevant, quite honestly. So I think, again, it's more education. How do financial institutions think about the problem differently and then work with their partners to solve that problem? Because no one financial institution is going to be able to do it all by themselves.
Yeah, and I agree. I think going to your financial institutions and asking them what they're doing in this space, what can they offer you, what tools do they have, what education, what use cases have they seen being successful? And that seems to be the biggest thing I find anytime we talk about instant payments is tell me the use case, tell me what a good scenario is. And those will continue to expand, and that's back to the education. We have to continue to educate the industry on these are some really great uses for real-time payments. I agree with you long term, it should be all real-time payments, but baby steps.
Sure.
Dean, I'm trying to remember, ACH is still moving, what, 2 billion payments a year? I mean, 2 billion. I mean, it is still a massive, massive infrastructure, and it is the way that the majority of payments in the U.S. move right now, and it's going to be peeling back layers. We're not going to one day get a bank or a company to switch everything from ACH, but we've got to start chipping away at it. You could very easily move this particular use case into real-time payments and off of ACH. But that is a huge, huge beast. It's kind of mind-boggling, and it's like $1.3 trillion that it moves. It really is unbelievable the amount of money that moves in the U.S. through ACH. But starting to chip away at that and peel off those layers of the onion is key.
Yeah, an interesting stat on that I just saw the other day that we track is same-day ACH credits versus RTP credits. And we've now hit a 60-40 split. So if you look at the volume that we have on the RTP rails and the volume that's going over same-day ACH, there's 60% of the credits are flowing over same-day ACH. We're now at 40% of them that are flowing over RTP, and I expect that to continue to erode over time as we move it forward, right? So as you rightly said, as you peel away the layers of that onion to help make that move forward, you're going to start to see things shift. But there are some things that won't ever shift. Hey, I'm just still want to get rid of checks before I retire. Right. So luckily I've got a few more years on that, but this is a long road to hoe.
It's quite a goal. As a merchant, when I do think there's a lot to trying to chip away at it. Like that's why knocking on Peter's door, on Connie at the Fed's door, and saying, "Hey, great, we want to do this, but we want to make sure that this can handle payouts more than $1 million, right? Things like that. If I'm going to use it on the Treasury side, I'm going to pay for season 5 of Stranger Things, or whatever it is. Like I want to be able to have the freedom to pay as I would like to pay, right? On the Treasury side. So I think that's one way that I can look at and try to help in encouraging it. But I do think it becomes more massive en masse as at the consumer side if we can figure out ways to kind of chip away at those scenarios too. And that's why I'm all in supporting other merchants that have use cases that work before the real-time recurring is put into place, right, at the same time. And sit on certain panels with other merchants as well as we talk about what can we do to make this thing move forward. I think all those things fall into place of trying to make this an actual reality at the end of the day. So.
So on the path to reality, next year, it's pretty publicized, FedNow is going to be launching their network. What do you all think that will do to the instant payments landscape? And Peter, I'll start the question with you, because I'm sure the audience probably wants to hear your perspective on this first.
All right, so I'll level set with you, and it's kind of a joke, right? Because the Fed and the TCH have actually been competitors, but also collaborators for as long as the Federal Reserve has been in existence. Which, again, if you listened to me earlier, was after we were formed. So we've been doing it a little bit longer. That said, take the jab away and say that FedNow could not exist without RTP. RTP would not be successful without FedNow. And the reason I say that is that FedNow, they would have never been able to write the business case to develop a new payment system if you didn't have a good majority of banks that were already moving in that direction. So the fact that the clearinghouse worked with the industry, and then we were able to secure the top 22 financial institutions as sure things to be able to go and use the network, ultimately gave the Fed the ability to enter the marketplace. Same as other products that they've done in the past, right? But what happened with FedNow was that it actually made RTP relevant for almost every financial institution in the US, because the Fed said, well, we think it's important enough that we're going to put money behind it as well and be able to develop a brand new thing. So while you'd think that, hey, at the end of the day, we just like, hey, why are you guys doing this, Fed? The reality is both actually help each other out. So what I've told financial institutions, and what I said earlier, and I'm going to say it again just so everybody hears it clearly, don't have a FedNow or RTP strategy. Have an instant payment strategy and figure out which network is going to be best once you figure out the strategies that you need to have to implement instant payments.
Same question to you, Laura, because I know enabling banks to have that instant payment strategy is something you guys specialize in.
And that is something internally I've had to counsel people stop calling real-time payments. You can't say real-time payments because that's what TCH's product is. We got to talk about instant payments, and we are very much trying to be neutral about it because we don't care which rail a customer uses.
That hurts me, by the way.
I'm sorry.
Get it.
I'm going to pile on there, too.
What has been interesting with the Fed, and in full disclosure, I worked at the Fed for a couple years. So this is the first, new payment rail that they've dealt with in, 30, 40 years? I mean, and it is surprising to me that they are putting some marketing muscle behind this, which I think is going to really benefit the entire industry. My email, I bet you every single day I get an email from a new, smaller institution. So historically, TCH has mainly dealt with larger institutions. A lot of the smaller institutions are much more comfortable with the Fed. They know the Fed. The Fed puts a little, well, it used to be a little terminal, now it's software, in their system where they log on and can do transactions, very manually, one at a time. But they can get in the game very easily with that. So I, Peter, agree with you. I think it's going to help the entire industry because they're evangelizing to more and more banks, and they will get more and more banks interested in this. So I think it's been great for the instant payments world.
Josh, question to you, and I'm going to tailor it a little bit. From a merchant perspective, do you care FedNow versus RTP, or what are your thoughts on that?
Peter, plug your ears. I don't care. But I agree with the sentiment of what I love about it is it's making it more and more reality, right? It's making it more and more. It's making it happen. I guess anyone that loves a free market, I love competition, right? And I think that needs to be in place. That needs to be there. It makes all of us stronger and all of us better at the end of the day when it's there. And I think that's for a merchant standpoint, it's needed. Now, I don't know if a merchant necessarily will care one way or the other as long as they get the same result and they're able to service their customers or service their business as they need to do so. I remember with the task force, I think the idea was like, okay, here you go. We create this, guys, do something with it. And that's, again, the clearinghouse did something with it. And I think that was tremendous. And I think with the Fed entering the pool, they're doing something with it. Others could do something with it. and try to provide a solution that we can get on these faster payments rails at the end of the day. And I think most merchants would agree with that point. And this is me speaking on behalf of all of them. So.
Got it. So, we've had some great discussions here about where we are, where we're going, and everything. And clearly, there's a lot of opportunities ahead of us. I'm going to ask you all to look into your crystal balls here and really look ahead towards 2023, because a lot of us in the audience are probably starting to think about our 2023 plans and kind of taking some of this into reality. But what do you see as the game changers in instant payments in 2023?
We're all looking at
I should give you rock, paper, scissors.
Yeah, go for it. So on my side, I think if RFP gets off the ground, I mean, of course, the FedNow is supposed to launch in 2023, and but also if RFP can get off the ground and really start becoming, in the front of consumers too, I think it can really become a game changer where we start seeing this being used in more use cases, from small tickets to millions of dollars. Like it could be tremendous in that front. So I think that's one of the biggest game changers I think coming in 2023. Hoping that it does come in 2023.
Yeah, I think we're making good progress toward getting financial institutions enabled with requests for payment. Again, the message has been out there since the beginning of the network, but it takes some time to build all these new front-end tools. It takes folks like FIS to build out their capabilities on that side, and it takes an ecosystem to say, I want to be able to deliver this and understand how I can actually give it value to my customer, right? So I agree. I think request for payment to me is really interesting. I think it's going to unlock a lot of doors. I mean, for us, we haven't sat idle and stopped innovating on top of RTP. We just launched 2 new services on top of the RTP rails, one with tokenization. I think tokenization is going to be key as we start to move into 2023 and protecting these accounts at rest, giving Netflix an opportunity to protect all the data that they have. We've enabled that to also be compatible on the ACH network, so tokens will have the ability to be interoperable on ACH and RTP, which I think is also helpful as people start to migrate toward their strategies in that space. And we're making it super simple for folks like Josh to be able to come to the clearinghouse and say, hey, I see Bank of America is tokenizing. Can I just get all tokens for my Bank of America account? We want to be able to make that happen for Josh so that he can actually protect all of his data. So I think that's going to be key. And then if you look at that as we move into 2024 and 2025, linked with things like Akoya and account authentication, the ability to issue a token that's for purpose issued into the back office of another application so that you can actually affect payments on it. I think that's going to be the future of connecting people, businesses, et cetera. So I'm very excited about where we can go with a lot of those tools as you start to bring them together. The other thing I'm very bullish on, especially when it comes to RFP and payment delivery, is now being able to deliver data with that. So
darn it, I was just going to go there.
Oh,
You
sorry.
stole my thunder.
So we just launched a new service called Document Exchange Services in April of this year. We're in production pilot right now. We'll be in full production by the end of this year. But the ability to now really have a Dropbox for financial institutions that allows you to pass a PDF or an XML file onto your partner without having the bank have to do the heavy lifting of trying to decode an addenda record. We've all known the failure of addenda records, so if we can now embed documents in payments, and what we developed with Document Exchange will work on RTP, it will work on FedNow, it'll work on ACH, it'll work on wires. So I think being able to now move documents along with the transactions, I think that's going to be the next big thing that's going to start to unbundle and de-risk a lot of organizations. So think about getting rid of business email compromise, think about getting rid of mail fraud, all of the things that happen with paper delivery today, and that to me really starts to streamline the back office processes of a lot of businesses and the experiences for the front end for small businesses and consumers.
And to build on that, I don't think we can have a payments conference without mentioning ISO 20022. It would not be a conference. And for those who haven't heard that term, it is the industry rapidly becoming the industry standard for formatting and communicating payment messages. TCH and FedNow, real-time payments and FedNow will both use that format. the benefit of it, the nirvana of it, is that it can carry lots and lots of data with it. I think there are two approaches. One is, embedding links that can drive you somewhere else to do it. But if any of us can really crack the nut of that data traveling along with the payment, and I've seen use cases that they've done in Canada with a relatively small Canadian company, and the amount of money they saved on invoicing, AR, just by utilizing ISO and actually passing that data along with the payment, so that that they only sent you they sent you $3,520 less than what you invoiced them, and here's why, and it's all embedded in the actual payment message. So that's something that I don't feel like to date, from what I've seen on real-time payments, banks have really cracked that nut and truly made use of all of that additional data that you can pass along with the payment. And that, to me, is a big focus for next year. How do we get that data, get the companies to put it into the payments and pass it to the receivers to facilitate your back office processing?
Well, thank you. And that concludes the prepared questions for the panel. So what we'd like to do is open it up to the audience at this point, see if there's any questions out there. I don't know if we can turn on the lights or turn off the spotlight. But if not, nice just ask out of the ask out of the darkness, and we'll answer your question.
We got somebody right there. I can somewhat see them.
Oh, come on.
We're thinking, we're thinking of as many ways as possible to let people enjoy Netflix, right, and be able to pay for Netflix. And hopefully they can do it with a faster payment at the end of the day. So.
I guess that's good. It looks like a microphone's getting passed around.
Yeah. So with the key to this, or one of the keys, is acceptance by the major banks. And they have to play along because they have majority of the bank accounts. They're looking to productize it. They're looking to monetize it. How do you encourage them, incentivize them to support instant payments, being that they're a key participant?
So are you thinking from another bank perspective or from the largest banks?
Either, right? So you stated the banks have to participate. They have to have APIs. They have to, like they do with Zelle to some degree, they have to participate, whether they're small ones or big ones, to have mass acceptance.
Yeah. So I think from a financial institution perspective, some of the largest financial institutions are already seeing the writing on the wall, that they can't continue to have walled gardens to be able to keep their customers there, because their customers will leave if those walled gardens continue to exist, because it's not going to sustain in the future, right? Same reason the CEOs of the largest financial institutions approved the build out of a real-time payment rail in 2014, a little bit ahead of when it really needed to be in place for the US economy, right? So I think these guys are smart. They figure it out. Like, they're going to lead their companies on there. For me, though, for smaller institutions, it's actually more exciting. RTP actually represented a ability to level the playing field massively for all financial institutions and give every financial institution the exact same set of tools to build off. And if I'm a smaller financial institution, I should have the ability to actually change my direction a little bit quicker than some of the larger financial institutions. I might not have the money, but I could at least change the direction. So I feel like smaller financial institutions, as they get smarter on all this stuff, they'll actually beat some of the larger financial institutions to the gate. And we've seen it with companies like Cross River. They're way out and far from a market perspective in terms of opening up APIs. We're seeing it in a number of mid-sized community banks out there where they've figured it out and said, okay, we are going to basically take the market share from the large banks. And that's great to see, because I think that actually forces us all to be better.
Yeah, just to kind of add to that from a banker lens, the investment, we need to do it for our customers. And what we're seeing is instant payments is not only solving customers' problems or providing solutions for some of the short-term challenges they have today, but in a lot of cases, it's letting them create brand new business models. And those brand new business models enable them to serve their customers way better. So when you start to look at it that way, it's really difficult. I mean, as a bank, you have to do this because if you're not enabling your customers to have those new business models, somebody else will. So it's a defensive play perspective, but it's great to be able to sit down with your customer and have a consultative discussion with them and help them launch something or bring a new solution to their customer base. So there's a big driver from that perspective.
So you talked about the use cases for RFP. I was just kind of curious how you combat fraud with the front-end customer, right? So you talked about recurring payments for Netflix. I get text messages saying my Netflix payment declined and I need to replace my card and it's fraudulent, So how do you deliver that message in a way that's secure and safe and the customer knows that it's coming from a legit place that they can respond to it and pay? Because, with everything that's happened with Zelle thus far, as great as Zelle is, you can't stop customers from falling for stupid tricks, right? So how do you combat that, especially in an instant payment format?
Yeah, I think fraud in general is a tough nut to crack, and I think part of the challenge we have, especially in the U.S., is that we don't do a good job as a financial institution community owning up to fraud and sharing data in real time with everybody else. So I think there's a lot that can be combated just by financial institutions sharing information. There are networks that exist out there for financial institutions to share that information in real time, but they're not largely leveraged by everybody because everybody's kind of ashamed that fraud happens. Now, here's the thing, it's payments, frauds are gonna happen, right? But in real-time payments, for example, on the RTP rails, we're less than 1 basis point on fraud in the entire network. So what we found is that actually by doing and moving to a credit push model in which the bank who knows their customer is actually facilitating that transaction, it actually reduces the fraud rates. Now, it doesn't mean that scams aren't going to happen or things like that, but I do think that as you look at commercial RFP issuance versus what Zelle did with their RFP product, which is let's just give the tool to everybody and let them all defraud each other, you're going to actually see it be more selective in terms of who does it, which means that you're going to have validated end counterparties on the network being able to actually facilitate those transactions. So I look at it as kind of twofold. One, if we can share data, we can actually stop fraud at its source before it even gets ahead. Secondly, though, I think what we have to do is be very diligent about who onboards customers onto the RTP network to allow them to originate requests for payments. And the good news is the bank that's receiving that request for payment should be able to validate all that information that it's coming from a good bank, a good corporate entity, and it seems to be for a legitimate purpose. And if not, there's a warranty claim within the network that would allow for that money to come back if somebody was defrauding somebody on that network.
I do think that's one of the things that we do need to make sure we're really paying attention to, because I'd like for things like irrevocability to stick around, and the only way it does that is if we make sure it is secure. And I also think the adoption is only going to really happen if we can do that in a way that also keeps friction at a very low point at the same time. And that's why the Faster Payments Council has some task force folks looking at that, and I think the more the merrier to try to figure that out. But I think it is a big, there's the directory model work group that I think is kind of tied into that. There's other fraud work groups, but that I think is a big one, and I think it's something that we need to give a lot of time and attention to. I don't have the answer to it yet, but it is something that we're talking to and trying to figure a solution to.
Are you doing anything around CBDC?
We're talking about the fact that it's a really bad idea. So the clearinghouse, I can speak on behalf of the clearinghouse. We've written a paper that was influenced by industry stakeholders that basically told the Fed that you shouldn't do it, but if you do it, you should only make it a wholesale CBDC and ultimately get rid of Fed dollars make them into a CBDC side. I think if we were to go down on a retail CBDC channel, we would be in big trouble. We tried that a long time ago. If anybody remembers the first bank in the United States and the second bank in the United States, they were run by a Federal Reserve-like entity as opposed to allowing for branch banking, which was happening across the U.S. both of them failed miserably. So if we learn from past experience, having that as a centralized retail presence is a really, really bad idea. So wholesale CBDC, I think, would probably work long term. But the question is why? We're already moving 80 to 90% of the dollars digitally anyway. So if you take that on top of it, why would you just create a new platform to do that?
Makes sense. Yeah, well, I see we're out of time. So Josh, Laura, Peter, I'd like to thank you all for being part of the panel. I'd like to thank payCLT for helping pull this together, and for RevTech and the companies that are letting us come up here and talk to you all today. So thank you all, and we'll all be around if you have any questions afterwards.
Thank you.
Thanks.